Imagine a hidden $700 billion vault of silver buried beneath Arctic ice. And one political move that could break every market assumption you've ever made. You won't believe what's happening right now on the geopolitical chessboard. How superpowers are colliding, and why gold and silver prices are going crazily high. And this all ties into our next chapter of the Silver Shockwave. Before we jump deep, hit that subscribe button and click the bell, because every angle I'm about to share impacts your portfolio, your future, and could redefine what safe haven really means. This isn't a drill. This is real money moving, real power shifting, and real metals exploding. Let us talk about two words you didn't expect to hear together: Trump and Greenland's silver vault. You've probably heard chatter online, memes, wild takes, theories, but here's what's actually going on. The United States under President Trump reignited one of the most heated geopolitical flashpoints of 2026, a push to gain control of Greenland. Not because of ice or tourism, but because of minerals and critical metals beneath that ice sheet. Rare earths, strategic metals, and yes, massive silver and gold deposits. The idea is simple: reduce Western dependence on China's rare earth dominance and secure a strategic Arctic foothold. Now hear this. Markets have already responded. Gold broke toward $4,750 an ounce, and silver surged into the mid-90s levels we only dreamed about a year ago. Analysts are calling it a safe haven explosion, rooted not just in economic fear but in geopolitical fire. Every tariff threat, every diplomatic standoff pours fuel on precious metals as capital flees risk and hunts shelter. And that's only the beginning. Because whatever you think about the idea of Trump unlocking a $700 billion silver vault, the real story is deeper. This isn't comic book fantasy. It's geopolitics mixed with real resource strategy. The U.S. is pushing allies and business partners to develop mining and rare earth projects in Greenland to break China's grip on critical commodities. China publicly criticizes the U.S. push and warns against overdependence on American security, turning this into a narrative on global power and supply chain dominance. So as Europe, Greenland, and NATO navigate this tension, investors are pricing in risk. Gold and silver aren't just metals. They're the world's alarm system. That's why Silver Shockwave is tracking this closely. When geopolitics get chaotic, precious metals light up. But don't let your focus only stay at the Arctic Circle. Check Japan. In late January, Japan's bond market erupted in what many economists are calling an unprecedented shakeup with global ripple effects. Years of ultra-low yields ended abruptly. Long-dated Japanese government bonds seeing explosive yield moves and volatile price action. With Japan's public debt already towering above 230% of GDP, political promises of huge tax cuts and expanded fiscal spending sparked investor panic. This isn't a Japan-only problem. Japan's government bond market has been a bedrock of global finance for decades. Calm, predictable, low volatility. Once that anchor breaks, correlation with other global assets changes, and silver. Silver moves with growth expectations, industrial demand, and fear. When global credit markets wobble, when bonds sell off, and when central banks adjust policy, precious metals become the store of value. You'll see traders quoting the old safe haven trade: gold first, silver a heartbeat later, because systemic risk has a price. Now let's tie another hotspot: Venezuela. Earlier this month, a dramatic U.S. operation captured President Nicolas Maduro, and suddenly markets got jittery. You might think Venezuela's oil doesn't splice directly into metals pricing. But here's the nuance. Geopolitical shock in an energy-rich nation carries risk premium across commodities. Oil volatility can push inflation expectations up, erode confidence in currencies, and make markets price and risk everywhere. That sends capital into gold and silver as hedges. And in the backdrop of all this is U.S.-China competition, a global tug-of-war for supply chains. Rare earths, technology dominance, military influence, and trade power. China may distance itself from specific flashpoints like Greenland, but it uses these crises strategically in its messaging to Europe and the global South, a warning against reliance on any one superpower. Here's the takeaway that most mainstream analysts gloss over. Gold and silver are not just reacting to inflation or rates, they are reacting to confidence and trust. When bond markets wobble like in Japan, and superpowers clash over resources like Greenland, When geopolitical shocks hit commodities like Venezuela, gold and silver become not just investments, but insurance. The more unpredictable the world becomes, the heavier the weight of demand on these metals. Remember, silver has this dual personality, part safe haven like gold, part industrial metal that's essential in tech, EVs, photovoltaics, AI, and defense. That means when uncertainty spikes and industrial demand stays strong, silver's volatility goes up, both price upside and deeper swings. It's not a one-way ticket, it's a lightning rod for risk and reward. So right now in early 2026, we're living in a world where geopolitical uncertainty is the market mover. And for Silver Shockwave viewers, that means positioning mindfully. Understanding that what happens in icy Arctic territories can echo in your portfolio thousands of miles away. If you're still watching, and I know you want every edge, drop a comment below right now with your silver price prediction for the next month. Do you think silver keeps roaring? Or will global actors diffuse tensions and calm markets before March? Your insight could spark debate and help the Silver Shockwave community anticipate the next move. And if you found this breakdown valuable, share this video with a friend who's serious about precious metals. Markets move fast, and information moves faster. Stay alert, stay informed, and as always, keep riding the Silver Shockwave.